Welcome back. You're tuned into Market Fatafat, where we are taking you through all the stocks that are buzzing in trade. And on the technicals now, we are joined by Foram M.Chheda, who's the founder of Chart Analytics. Hi, Foram. Welcome to Market Fatafat. See it is what you have picked out for us. Foram, this counter, in the last 1 month, it has started seeing an up move. In fact, it's moving towards its February levels. Do you see it going, touching those levels? What is the upside here?
Thank you for having me on the show. Well, to begin with on CAT, it's like those highs of around 2,998. That's almost 3,000 at the beginning of the year it tested or rather it touched. And since then, we saw almost a decline of 25-26%. However, it formed a very good base near 2,200 levels. And since then, we are seeing a gradual improvement in the stock. Today, especially, the stock is breaking out from a very short-term resistance and it's also taking off from a 100-day moving average. So overall, the stock is looking very bullish. Secondly, it did see a very good up move, but along with some kind of a down move or a correction right now, what we can see, the stock price has lost it from its highs, but it's come back to a breakout level, which becomes a good level to buy, and it's attractive from a risk-reward perspective. As far as volumes are concerned, good increase in volume, which is supporting this breakout. So I would say it's a good buy at these levels of 2,600. One can maintain a stop loss at around 2,490 and look for a higher target of closer to 2,800 to 2,850.
Alright, let's shift focus then and let's put the spotlight on Koforge because that particular counter is buzzing in trade today, and one of the reasons being is that Kotak Institutional Equities has come out with a note where they've initiated coverage on Koforge with an ad rating and a target price set at around 6,000 rupees per share, and that is almost 600 rupees much more than what the current price is. What they're saying is that the ongoing improvement in earnings, and also they praise the CEO and the leadership team for laying a strong foundation for the sustained growth. They're saying that the Koforge aims to scale revenue to $2 billion and beyond. What else is a note saying is that under the CEO, Sudhir Singh, Koforge has significantly improved its revenue trajectory. Previously, the company operated as a mid-size IT services provider with strengths in traditional applications and IMS services, particularly in the travel sector. And despite efforts to expand in manufacturing, media and execution and strategy, cohesion was lacking, resulting in the modest revenue growth earlier on. But they're saying that post the fact that you had Sudhir Singh, who was appointed, that the company has actually revitalized itself and they are expecting an organic revenue compound annual growth of about 12% from FY24-27. So yes, we have bullish commentary coming in from Kotak on Koforge, and that's why the stock is buzzing in trade.
All right, Forum, coming to you, IEX is what you've picked out for us. It recently hit its 52-week high at around 187 levels in around 18th of June. Tell us from here, what is the upside for this one?
Well, as you rightly said, that it did mark a 52-week high recently. So that is the reason why I have technically picked up this stock. Now, when we talk about a little bit of a historical data, in this year, the stock price was in a very broad consolidation between 130 to 160 for almost 4 to 5 months. Now, this at the beginning of this current month of June, we did see a good breakout from these 160 levels, and we saw the stock price moving and marking a 52-week high. Now, since the price has been retracing, I wouldn't say correcting, but it's just merely retracing because it did see a very good steep upward momentum. As per the Fibonacci levels, the stock is likely to take support near the levels of 170, and thus I would suggest a good buy at 170 levels. Stop loss can be maintained at around 164, and a higher target of closer to 192 to 194 can be expected.
All right, moving on to the other counter, Nykaa is the counter in focus today. Equirus is initiated along with a target price of 240 rupees per share. Now, they feel that India's changing beauty market is on a decade-long growth trajectory, and the formidable moat that they have in the BPC ensures Nykaa's leadership. Now, the fashion business, they're rather a late entrant, but they have a niche market, and the new businesses are likely to complement the BPC segment. And on the back of that, Equirus is maintaining a long on Nykaa, and Nykaa is in focus today. Currently, we do see decline from the day's high with cuts of 1.2% right now.
All right, let's talk about Tejas Networks then. Forum, how are the charts for Tejas Networks looking now?
Well, the overall trend of this stock is bullish. Now, when we talk about that in April, it formed a bottom closer to a level level of around 660 odd levels, and now it has tested today. It's marked another high, 52-week high of closer to around 1,495. So overall, it has gained nearly around 120, more than 120%. However, the stock continues to see a gradual up move, that it will move up and then consolidate for a while and then again pick up momentum. And with this momentum, we are seeing a very good increase in volume, which is supporting this entire bullishness in the stock. So since currently also the stock price made a high of 1495 and currently it's trading at 1425. So it's merely just seeing some kind of a profit booking right now. But since it's retracing, so it looks good at these levels of closer to around 1390, and maintain a stop loss at the levels of around 1375 and expect a target of closer to 1600 levels.
All right, Janay, coming to you, you've picked out PI Industries for us. This one was trading with gains of 5% in the morning, has given up those gains, is now trading with gains of 1%. Tell us, what is the news flow here?
Well, yeah, so the company had announced acquisition of Planet Healthcare with a consideration of about 32.8 million euros. Now, Jefferies have come up with a note and they have maintained their buy rating with a target price of rupees 4,750. What they say is that biologics acquisition is small yet very promising, and the acquisition is in line with the growth strategy stated by the company. Now, this acquisition will give access to the product portfolio, access to major crops across key global markets with the annual potential for revenue of up to $75 billion. Also, Equirus maintained a long rating with a target price of rupees 5,500. What they believe is that with this acquisition, PI would be also able to transfer the technology to manufacture biological products with the total TAM, that is total addressable market, of more than $10 billion. Now, the Equirus believes that this acquisition should give PI Industries an edge over their peers.
All right, let's move on. Let's talk about CSB Bank. Then that particular counter is in focus. In fact, it saw an uptick of as much as 4.5% on an intraday basis. And one of the reasons why the stock actually saw a big up move is on back of the 9% equity block deal that took place today. The top shareholder, Fairfax, via FIH Mauritius Investments, sold about 9.7% stake in the bank for around 590 crore rupees, and post this, their stake now drops to 40%. Remember, in November, RBI had asked FIH to reduce the shareholding to 26% over 15 years, and the stake sale moves FIH closer to that compliance level, and that's why post that block deal, you can see that spike in the share price.
All right, Forum, coming to you. Muthoot Finance is what you've picked out for us. The stock seems to be moving towards its 52-week high. Tell us, what are you seeing on the charts for this one?
Talking about Muthoot Finance, now from the March lows, the stock price has already seen a gain of nearly 30-35%. And if we consider like 1800 as a psychological mark, currently the stock price is above that level as well. But we've seen a very consistent rise in the stock. Now the stock price is also given a breakout from an upward sloping channel also, which is adding to the bullishness, or I would say buying opportunities. And as you rightly made a mention, it is trying to make a 52-week high. So, and along with that, breaking out from a resistance indicates that there is some further momentum that we can expect. And the stock price is backed with good increase in volume as on today. And there is a positive divergence on RSI, which is also supporting this entire momentum. Thus, I would suggest a buy on Muthoot Finance at current levels of 1800. Stop loss should be maintained below the levels of 1759, and one can expect a potential target of closer to around 1920.
All right, so that's the take coming on Muthoot Finance. On that note, we'll slip into a break on this edition of Market Fatafat. More on the other side, don't go anywhere. Welcome back. You're watching Market Fatafat right here on ET Now, and the flashes on the bottom of your screen. The additional 3.3% equity has changed hands via block deal. This is in India Cement. Remember that big deal that happened this morning where Ultratech Cement actually came up with an announcement that they will be acquiring about 23% stake in India Cement, and it will be at a price of around 267 rupees per share. And that it will be a non-controlling financial investment that they will be making in India Cement. This morning, We already saw a block deal of about 20% take place in India Cements, and now the block deal that has taken place is about 3.3%, taking the total to in excess of about 23%. So yes, that looks like that block deal has happened or that transaction has happened, but yes, we have to wait for the name of the exact buyer and exact seller in this particular block deal. So India Cement, once again a block deal coming in of additional 3.3% equity stake, Ankita.
Absolutely. Both have been in focus since morning on the back of that deal. But moving on to the IT pack that is in focus today in the back of a note from BofA's. Now, the quarter one, according to quarter one preview, there are few instances of cuts to IT spends, and Infosys is likely to fare better according to BofA's. The company guides and commentaries are likely to stay unchanged, but the easy supply side dynamics make for easy margin picture. Also, Infosys could lead the peers on top line performance. They do see a dip in the margins for HCL Tech and flattish for Tech Mahindra versus the expected uptick. On another note, by Macquarie also, they are maintaining an outperform rating on HCL Tech, with a target price of 1,800 rupees. So all these names, HCL Tech, Tech Mahindra, Infosys, are in focus today.
All right, let's talk about L&T Finance, then Foram. How is this one looking on the charts to you right now?
Well, L&T Finance has also seen a decent up move in this current month. So from the lows of around 144, the stock price has moved closer to level of around 186 to 187. Now the price has been consolidating from the past few trading sessions, and this consolidation is merely just indicating more of accumulation because there has been a rise in volume even during this consolidation phase. So since the stock price is moving above the multiple moving averages of 50, 100 and 200, it's indicating that the overall trend, the underlying trend remains bullish. Secondly, as far as RSI is concerned, it's very much in sync with the price. Thus, I am indicating a buy on L&T Finance at the levels of around 175. Stop loss should be maintained below the levels of around 171, and one can look for a potential target closer to 193.
All right, let's move on and let's talk about EMS. That one has hit a fresh record high level on an intraday basis. If you look at the stock, it saw an uptick of as much as 5.3% last time I checked, taking the stock to a record high level of around 675 rupees per share. Now the stock has given all of those morning gains, and the reason why this particular counter was buzzing is because it received a government order worth about 119 crore rupees. This was survey, design, construction and operation of the treatment works in Uttar Pradesh. But now, as you can see, the stock has reversed all of its morning gains where it had hit a record high. Now it's down about 1.4%.
All right, Janae, coming to you, Route Mobile is what you picked out for us. In fact, the share jumped 15% to hit fresh one-year highs today. Tell us, what's the news flow here?
Company, the Proximus Group, which is the parent company of Route Mobile, and Microsoft has signed a new strategic partnership for collaboration on digital communication and cloud. Now they have signed a 5-year strategic partnership allowing both the companies to strengthen their digital lead and accelerate their innovative offerings to the business and residential customers in Belgium as well as abroad. Now this partnership will be focusing on advancing communication platform services, enabling seamless customer engagement across multiple channels is what company says, and Microsoft will be working closely with Proximus Group to optimize their go-to-market strategy, helping them be more efficient in their operations. So this, and on the back of this, if you look at the stock price, the stock is buzzing about with the gains of about 14.47%.
All right, moving on then, Forum, let's talk about Kosar Electrics, and how are the charts for this one looking to you right now?
Well, currently it is just merely consolidating, but this year from the lows of around 95 in March, the stock price has shot up to around almost 237 levels till the month of May. That was nearly a 140 to around 145% of gains. Post that, we saw a steep decline also coming in, which was nearly a 50% retracement of its entire move from 95 to closer to 237 levels. And now the stock price is gradually rising. Today the stock price has seen a bit of a decline, but it is closer to again a support level. Thus, I am saying a buy at these levels of around 180. Stop loss should be maintained closer to a level of 171, and the target is closer to 220. And additionally, I would just like to add in that since the price has retraced, there has been very less volume, which indicates that there is no selling pressure as such on this count.
growth targets are coming in for Kirloskar Electric and not Kirloskar Industries that you saw on the screen. But let's take a quick note on what the markets are doing in trade today. Yes, cement is definitely has to be the sector of the day, with Grasim being the top gainer on the Nifty. And yes, rest of the sector also the stocks are buzzing in trade, apart from Dalmia Bharat, which are sulking on back of downgrade that is coming from Nomura. But otherwise, if you see, the markets are holding on to gains, rather building on to gains. Sensex is once again trying to touch that 79,000 mark, and Nifty again trying to make the dash towards that 24,000 levels. Nifty Bank, on the other hand, let's see what Nifty Bank is doing, because with the rest of the market, you saw Nifty Bank actually seeing the sharper cut, still in the negative territory. That is the Nifty Bank for you. And the broader markets, however, are seeing much more deeper cuts, with small cap index declining about 0.9%. It is actually underperforming the benchmark indices as well as the mid cap index. So yes, the markets right now trying to make some sort of a recovery, but cannot say that's the same case coming in for the broader markets, at least, especially the small cap index, Ankita.
Absolutely. But before we end this show, Cheryl, let's go across to our colleague Anurag Joshi, who caught up with Hemant Mishra of S-Cube Capital on the potential capital inflow as India enters the JP Morgan Emerging Market Debt Index from tomorrow. Let's go across and listen in to that excerpt. And with that, it's a goodbye from Cheryl and I and the team that put the show together. Thank you so much for tuning in.
Very important moment in terms of getting included in what is the benchmark index globally used by passive managers to allocate money. And it hits our macro at a few levels, and beneficially so. One is obviously, you'll see an incremental $30 billion of flow coming in by virtue of this inclusion, but then the Bloomberg Barclays inclusion, and you're also expecting the Russell FTSE inclusion to happen. And in aggregate, that will lead to around $40 billion, which obviously significantly improves our balance of payment. But I think what it does at a more secondary level is it substantially reduces the government's debt burden in terms of interest cost. You'll have an incremental liquidity pool coming in, and as a consequence, the government will find it easier to get its borrowing plan routed through the market without having any significant disruption.
With more foreign money flowing into Indian debt market, do you expect the cost of borrowing from local debt markets to ease?
Oh yeah, absolutely. So you're already seeing a bit of a rally in the Indian bond markets, and this has happened because the active managers have already started allocating money, and you've seen around $8 billion of that flow come in ever since this announcement happened. And the passive managers will only come in now in the next couple of weeks and over the next 10 months. This incremental pool will clearly mean that there is more demand than supply, and as a consequence, you will see yields coming down. In our view, you'll see the 10-year come down by another 20-odd basis point at the least. It's obviously helped by the fact that inflation in India continues to be low. The central bank has done an outstanding job in containing that. And also the fact that the US is getting into a fairly dovish stance. We expect the US Federal Reserve to start cutting rates sometime in September.
How much of capital inflows is S-Cube expecting from JP Morgan's step? That will be over what period of time in your view?
So from the JP Morgan decision itself, we're expecting around $30 billion to come in. And this would happen over a 10-month period because it's a staggered entry starting next month. So around $3 billion. And we'll expect it to be fully taken up. And we are fairly convinced that there'll be significant interest for two reasons. One is the Indian debt stock is one of the largest in the emerging markets. So clearly people will want to prefer and want to invest in that particular asset. And the second is India has the largest duration. The Indian debt market has the largest duration in the index at around 7 odd years. And with a 7% yield for that particular bucket, and as I mentioned, we're not expecting the rupee to depreciate. That's a very good return. That's a very good return for most investors to come in. So we'll expect the full $30 billion on JP Morgan to come into our system in the next 10 months. But as importantly, we will expect the flows on the back of the Bloomberg Barclays inclusion and the FTSE Russell inclusion that we're expecting over the next 6 months to add another $7 to $8 billion. So a total of around $38 to $40 billion over the next 12 to 18 months.
Do you expect RBI to expand the list of FAR eligible bonds in the near future, given that foreigners can buy under the scope of JP Morgan's index?
So the RBI has done an outstanding job because I think getting that list of securities qualified as FAR, which is fully accessible route, was critical to this JP Morgan decision and the fund flow. So they've already gone ahead, and originally you only had 5-year, 10 years and 30-year securities qualified as FAR. They've already gone and included 7 and 14-year securities. And there's a beneficial impact of this, they are saying. It's leading to a significant amount of liquidity and turnover. Do expect the Reserve Bank of India to continue doing that. And as importantly, at this point in time, the proportion of the Indian government stock, government debt stock that's owned by foreigners is very small. It's 2.5% odd. I would expect that number to be doubling to at least 5%.
If you like this video, then like, share and subscribe to ET Now.